Alright guys, welcome to this lesson on bullish Harmy. So disclaimer first before I move on. Okay, so basically what is bullish Harmy? Now bullish Harmy looks something like this. So basically first thing first, you would have a large bearish candle followed by a small bullish candle. Now you see bullish Harmy pretty often, and it is a common pattern. You can see it in an uptrend, you can also see it in a downtrend, and when it occurs in different places, it would mean different things. Okay, and understand that bullish Harmy is only useful in a trending market. If you see this in a sideways market, it will be less effective. Okay, and basically bullish Harmy signifies a reversal. To be specific, a bullish reversal. Or it might just mean that the market is going to go through a consolidation. It might go sideways before it reverses, or it might go sideways forever before it continues in the same direction. So a lot of things can happen, and also it might also not work out. Just like any other pattern, any other indicator, it might not work out. And Harmy is actually a pattern where it has a lower probability than the engulfing pattern. So very often you see that bullish Harmy would cause the candlesticks to move sideways instead of causing it to go up immediately. So very often times you might see that when a bullish Harmy appears, let's say in a downtrend, it might go sideways a little bit before it goes up. Now just bear in mind that the color of the second candle is not that important, but preferably you want it to be green color and you want it to be small as possible. So the candle body is really important, but when it comes to the shadow, it is not that important. The shadow of this second candle can go above, can go above and also below the previous candle, but the body must be small, must be preferably below the half of this candle. Okay, so if I'm to ask you right now, based on what I've taught you, which pattern is stronger, the first pattern that looks something like this, or the second pattern that looks something like this? So the smaller the second candle as compared to the first candle, this means that there's a strong change in the buyer and seller balance, and hence there will be a stronger signal. Now when it comes to the second candle, this bullish candle goes all the way up to the halfway point over here, and this whole entire pattern actually means that it is neutral as compared to this pattern. Of course, it might go the direction you want it to go, which is upwards, but then if you have to compare these two, this one would be more ideal. A smaller candle, you want a big difference between the first candle and then the second candle. Okay, so the larger the first red candle is and the smaller this second candle is, the stronger is the signal. So I want to share with you some signal enhancing factors in detail. What makes a bullish Harmy pattern strong? What makes it weak? Okay, now another quiz for you, mini quiz for you. Which one is stronger? Okay, just now I gave you the answer already. Which one is stronger? Take a few seconds to think about that. The first one has a small red candle and a small green candle in relative to this one. Right, this one's a large red candle followed by a small green candle. Which one is stronger? Like I said, the second one would be stronger because when the first candle has a long red body, alright, the stronger it is. So hence, if you have to compare these two, this one will be stronger than this one. This one is still a valid bullish Harmy pattern, just that if you compare these two, this one will be stronger. Okay, now if you put this into a chart, ideally you would want it to appear at the end of the trend. Okay, you want a long red candle followed by a small green candle. So you can see that this one turned out to be a little bit like a doji or a spinning top, which is very good. Okay, doesn't matter if the shadow goes down, doesn't matter, the candle body is the most important. If I zoom in a little bit for you, now the thing is, if you have listened to my previous lesson, one clue that the trend is going to end is when there's a big sell-off. Okay, there's a large sell-off. This increases the probability that the trend is going to end. Okay, it's not guaranteed, but it increases the probability. Of course, there's a sell-off over here as well, but then this one is followed by a red candle, which is not that ideal. Ideally, you want it to be green color. So what you can do is that once this candle is completed, you can put your stop a little bit below this candle, and then you can put your buy order at the close of this large green candle. basically you can place your buy order on the close of this candle. Alright, if you pick tops and bottoms, but of course you need a lot more confirmation for you to make a buy order. I'm just illustrating this to you for simplicity's sake. The second clue that the trend is going to end is when one of the candles close above the high of this candle. Okay, you want the candles to shoot up and then close above the high of the bullish army. So you can put your stop somewhere here, and then you can make a buy order somewhere here. Alright, TP target, you need a lot more indicators for you to determine when should you take profit. Okay, now again, one more quiz for you. Which is stronger? By now you should know the answer. Okay, the first candle's pattern has a larger green body, then the second candle pattern has a smaller green body. Which one is stronger? Of course, the second one again. This is too easy for you. Okay, the second candle. Now the thing is, the shadows, like I said, it can extend downwards like this, but you know, ideally you want it to be confined within the first candle, just like this one. Okay, now I'll give you another example. Can you spot where the bullish army pattern is? So you can see that again, there's a big large red candle followed by a green candle with a small body. Now the thing is, in a decline like this, why is it that price would reverse, especially when there's a big sell off? Because when the price became really low, it gets lower and lower and lower. At the end of the trend, traders would start to take profit because the markets has already went so low. They think to themselves, okay, it wouldn't go any lower, so they would start to take profits gradually, and hence in this case the market consolidate a little bit, okay, before it reverses. Okay, so I'll give you another example. So over here I drew a support zone based on this low and also this low. Okay, now can you spot where the bullish army is? Right here. Okay, this pattern right here. Again, you see a big red candlestick followed by a small green candlestick with small body. Now to add additional confirmation to your bullish army pattern, first thing first, you can use your support and resistance. Okay, second thing is, look at what the third candle looks like. Okay, the third candle after the bullish army. Ideally you want a bullish candlestick to appear, meaning a green candle to appear right after your bullish army pattern. Okay, so when do you enter? When the candlestick goes above the high of the bullish army, like I said just now. But if you want to enter early, you can enter over here. But if you want to become more conservative, then you can enter here, okay, with a buy order. Alright, because this is the place where it went above the bullish army high, and you can put your stop loss slightly below your bullish army, which is right here. Okay, this is your stop loss, and then you can take profit at the previous swing high or at a resistance area. Okay, so you can see that there's a resistance area over here based on this point and also this point where the price couldn't penetrate to. So after this pattern form, you can see that price went down a little bit. Don't panic about that. And the price eventually went back up and then hit your TP target. And of course, you get a very good risk to reward ratio in this trade. Okay, your trade wouldn't work out all the time, which is part of trading, but as long as you have a good risk reward ratio, then in the long term you can make money. Now of course, from the example just now, on hindsight it's easy to tell that the bullish army is going to work out most of the time, but if you cannot see what's going to happen, let's say for example you see a bullish army pattern over here. Okay, how do you know whether it's going to work out? Now, based on different criteria, the confirmation signals that I gave you just now, can you tell me whether this pattern is ideal or not? Yes, it is a bullish army, but is it a good bullish army pattern? As you can see that the candle body for the second candle is pretty large. It is not as small as just now. So to be safe, don't enter into this pattern. So this one over here is a failed pattern. Okay, can you spot any other failed patterns? One more over here. Okay, and the thing is that you wouldn't enter into these failed patterns because none of the candlesticks, okay, let me just rub this off first. None of these candlesticks actually went above the bullish army high, which is here. So it's very important for you to be patient and not enter when you see a bullish army pattern. You want it to go above the bullish army high before you look for an entry. So again, the bullish army pattern over here, you wouldn't have entered because none of these candlesticks that came after that went above the bullish army, right? So this is how you spot false bullish army signals. Doesn't mean that when you spot a bullish army, then it's for sure going to work out, okay? So at the end of the trend, you see another one, bullish army. Now you have a big large candle over here, followed by a relatively smaller green candlestick. Okay, but this is not a confirmation that you should enter. You need to look at what happens after that. Okay, so right after that, a doji forms. This is more like a dragonfly doji. Okay, because it has a longer lower wick, and subsequently a big green candle forms. Of course, you wouldn't enter first if you're a conservative trader. Wait for the price to go above and close above this bullish army high. So this candle is potentially where you should enter. Okay, the candle close over here. You can place a buy over here, and again stop loss below your bullish army pattern, and then you can take profit at the recent resistance or the recent swing high. If you're more of a conservative trader, then you would spot a resistance over here. Okay, right here, then you would take profit here, or you can gradually take profit. This is your TP1 target, then there's a resistance here. Okay, then maybe you can take profit here, and then there's another resistance over here, even though it's not that strong, but you see where the price bounce off. So another good confirmation that the trend has ended and that this is not a temporary retracement is, of course, you need to look at this trend line over here. There's a trend line violation. Okay, it broke above this trend line over here, this steep trend line over here, and then the moving average crossover. Okay, 50 moving average cross above your 100 moving average. This is another confirmation that, okay, price would potentially reach your TP3 targets. Okay, so when price hasn't crossed over, you can take until TP1. That is if you pick tops and bottoms. And then when price crosses over, you can take all the way until TP3. But again, it depends on your risk appetite, because conservative traders, they would just take profit straight away at TP1, whereas aggressive traders, they will gradually scale out and then ride the trend until TP3. Okay, so it depends on your risk appetite. So another way that you can confirm that the trend will go up is by using oscillators, which I'm going to teach you in the next few lessons. But for now, just understand that in a downtrend, okay, in a bear market, you want to look for oversold signals for you to determine whether the trend is going to end. Okay, for you to determine whether the trend is going to end. So in a downtrend, how do you determine that the trend has ended? When the stochastics goes to oversold, okay, goes to oversold, this is when you will know the downtrend is going to end. But of course, in a downtrend, like I said, it would generate a lot of oversold signals. So oversold signals in a downtrend could actually mean that the downtrend is getting stronger. But if it occurs at the end of the trend, okay, it might indicate to you that the downtrend has ended. So it depends on where the oversold signal occurs. Can you spot where a bullish army is? Over here. Okay, of course, when your bullish army forms, it doesn't immediately reverse. So this one ranges a little bit, okay? And again, you wait for price to break above this bullish RMA high. So this candle closed over here, so you can make a potential buy over here. Alright, and again your stop loss, put it below the bullish RMA, so you can put it at this swing low over here, slightly below it. Okay, stop loss over here. Make sure you have a good risk to reward ratio. So you can put your TP target at the recent swing high or resistance level, which you can put it over here. Okay, so again you have a good TP target, good risk to reward ratio. So you realize that this resistance eventually became support right here, right? So definitely I'll cover more on stochastics and how to combine everything together in the next few lessons. I'm just extracting each tactic or strategy individually so that I wouldn't combine everything together and then make you confused. Understand what I'm saying? I don't want to combine like trend lines, stochastics, RSI, like moving average all into one chart, because that is for the end of the lesson when you have mastered everything. So another oscillator that we can look at is CCI. Again, I just need you to focus on overbought, oversold signals. So anything above the midpoint over here, okay, is the overbought level, and this level is the oversold level. Okay, so just now we are looking at bear markets. You can use bullish RMA in a bear market to help you spot a trend reversal. Okay, how about in a bullish market? In a bullish market, you can use it to enter when the market corrects downwards. So in a bullish trend, it doesn't go straight up like this. It goes up and then retrace, goes up, retrace, goes up, retrace, goes up, retrace. So you want to enter when it retraces before it bounces up. So one example is over here. Okay, can you spot this bullish RMA pattern over here? Right, it is not super strong, but context is very important. Can you see where the bullish RMA pattern is? It is sitting on this trend line, okay, which tested 1, 2, and then the third time. Alright, and the second thing is that it almost tested this blue line over here. This is our 200 SMA. Okay, 200 SMA, and then it consolidates a little bit before it goes up. And of course, some people will consider this as bullish RMA pattern as well, because you see a red candle body followed by a small green body, and this one worked out as well, because again it tested the trend line, it tested the 200 SMA just nice, and at the same time CCI went to oversold. Okay, remember in an uptrend we look for oversold signals to enter, and then in an uptrend when it goes to overbought, it can either mean that the bullish trend is getting stronger, or if it occurs at the end of the trend, it might mean that the trend is going to reverse. So another indicator that we can use, a momentum indicator, is RSI. So again, you see a bullish trend over here. So can you spot where the bullish RMA patterns are, where we can potentially enter? Now there's one over here, but it's not super ideal because you're buying in a downtrend. So if you're still a beginner trader, I wouldn't recommend you trading against the trend. There's one over here, okay, where the bullish RMA tested our yellow line over here, this yellow line, which is our 50 SMA, and at the same time it tests this trend line for the third time. Alright, so when the price tests trend line for the third time, this is a good time to go in. And RSI, if you look at RSI, it almost went to the oversold level. Now the thing about RSI is that it wouldn't give you as many signals as compared to CCI and the stochastics. It wouldn't give you that many signals, but the good thing is that there would be less false signals, because remember that if an indicator gives you a lot of entry signals, then the probability of you getting into false signals is higher. Okay, so there's a trade-off in that. So if you compare this RSI with CCI, right, at the same point, you realize that CCI went all the way to the oversold level. Alright, so if you want more trading signals, you can use CCI. But you must be able to handle losses, because when something gives you more signals, then this also means that there will be higher percentage of losses. So what you can do is that you can put your stop slightly below a trend line. Okay, wait for the price to break above this bullish army high, which is around this candle. Okay, so you can buy over here at the close, and then you can take a profit at the recent swing high, which is over here. Okay, TP target over here. This will be a shorter term trade. Okay, will be a shorter term trade, but make sure you only enter when the risk to reward ratio is good, because sometimes if the swing high is very low and then your TP target is so tight and then your SL is so wide, then don't go in. So another principle you need to take note of is you only enter when the risk to reward ratio is good. By good, I mean minimum 1:1. Okay, in other words, your TP target has to be either equal or wider than your stop loss target. If your stop loss target is wider than your TP target, then please don't go in. Okay, discipline is very important. Okay, so the next pattern we're going to talk about is a derivative of the bullish army cross. Basically, it looks something like this: a big bearish candle, same thing, but the second candle is the difference. Okay, instead of being a small green candle, you have a doji. Okay, you have a doji, and this increases the indecision of this pattern. Okay, so you have a candle body, big red body, followed by doji formation inside, and the second candle must form within the length of the first candle. Preferably the body must be within the length of the first candle. The length of the doji doesn't really matter, that, but preferably it has to be inside the big red candle. Okay, so wicks aren't significant. The body is. Make sure that the second candle is a doji. So there will be a potential reversal from bearish to bullish if found in downtrend, same thing as bullish army. So if you are to ask which one is a stronger pattern, is it bullish army or bullish army cross? It will be bullish army cross. But the thing is, bullish army cross is not as common as bullish army. And if you are to compare Harami patterns, doesn't matter cross or the normal Harami with engulfing pattern, Harami is still generally weaker, but traders still pay attention to it because it is a very common pattern. Okay, so it gives you a signal as to when the trend is going to end or when the retracement is going to end. Okay, so traders use it as a warning signal rather than a surefire way that prices are going to retrace, are going to reverse. So it's a stronger reversal pattern than Harami due to the presence of doji. So same thing with bullish Harami, you also need a third confirmation. You want to make sure that the third candle is a bullish pattern. Okay, so give you one example. So you have a bullish chart over here, and of course with any bullish trend there will be minor retracement, just like this, just like this, just like this. So you can see price retrace here, and then there's a bullish Harami cross over here, and then immediately there's a reversal. So you can use bullish Harami cross to spot retracements, and same thing, you can also use it to spot reversals of trends. When you see this in a downtrend, confirm it with other indicators with the context of the market, then you can pinpoint out when the price is going to reverse and also when is it going to retrace. So with that, hopefully this gives you a clear idea on how the bullish Harami works, and with that I'll talk to you in the next lesson.